Welcome back. You're tuned in to Chartbusters here on CNBC-TV18. As promised, let's get chatting with the management of Fortis Healthcare. The company reported a strong set of numbers. The profits jumped up by 57%. The margins expanded to 22.6%. To help us out with the quarter gone by, we're joined by Ashutosh Raghuvanshi, the MD and CEO of Fortis Healthcare. Hi, good morning, Mr. Raghuvanshi. Thanks a lot for joining in. Well, let's get a couple of details out of the way. What kind of occupancy are you looking at? How do you see your case mix shaping up moving ahead? And also the average revenue per bed. These three numbers, if you could help us out with, the broad range will do.
Good morning. Thanks for having me. So the quarter has been good. We had about 69% occupancy during the quarter. We expect this to go to 72% over the next quarter and improve from there on. As far as RPOB is concerned, that is a result of the case mix, as you asked. And what we have seen is that our growth in some of the high-end specialties has been much faster than the core specialties. So oncology segment, for example, has grown very fast, and it is one of the largest segments for us now. And there the realization is typically higher, and that has led to a higher RPOB. So we expect that our momentum of both occupancy as well as RPOB growth will continue, and that should result in better outcomes in future.
All right, better outcomes in future on the top line. I'm looking at your margins. They improved as well, and you've given a guidance of holding on to these margins between 22 to 23% for the entire year, led by both your diagnostics business as well as your hospital business. What I want to understand is that there are a couple of underperforming properties as well that you have, Jaipur, Vashi, etc. Do you plan to, hive them off in your margin guidance? Is that baked in as well? Because you recently did sell the Richmond hospital.
No, at present, we have no plan to hive off anything. Most of these facilities which were underperforming, there were 4 facilities which were underperforming. 2 of them have turned around significantly, and the 2 you mentioned, Vashi and Jaipur, have still underperformed. However, there are signs of improvement in both these units, and we believe there is a potential in these units, especially Jaipur, where we are looking in terms of adding additional capacity and also adding additional modalities like oncology, radiation therapy, etc. And with those facilities, we expect that this hospital has a great future potential, and we expect to persist with these.
So this margin guidance that you've given us includes the possible turnaround, or that could be an additional bonus if that happens?
No, that would be additional. We are currently talking only about the current performance.
And how much would that additional bonus be? 50, 100 basis points?
We expect it to take more than a year. So I don't expect that to contribute this year, but certainly the next year.
Okay, all right. Mr. Raghuvanshi, a quick word on your debt number. Where do you see this one stabilizing at? And also, if you could help us out with plans for an IPO. In the past, there's been a lot of to and fro, Agilis. Do we hear something about it sometime in this fiscal year?
Yes. So as far as our debt status is concerned, EBITDA to debt ratio is about 0.93 at the moment. We believe this is a comfortable ratio, but we don't expect it to go up from here. It may marginally go up during this financial year, but it is expected to come down by the end of this year. Most of our brownfield expansion, which we have about 900 beds getting added during this year, is coming from internal accrual. So that way, the debt situation is pretty stable, and I think this is a peak for the moment, and we expect it to come down from here. Now, as far as Agilis is concerned, you would have seen that the performance has improved, but it was lagging for past few quarters. And this quarter, there has been a growth both in terms of volumes as well as in terms of ARPU. That's why the bottom line is better. So we expect that trend to continue. We are focusing on improving the performance of the diagnostic business. We are rationalizing the lab networks, etc.
Are you doing an IPO, Mr. Raghuvanshi? Are you doing an IPO for Agilis?
We will do that at the right time. It is not in the works at the moment.
All right, take that point. Thank you so much, Mr. Raghuvanshi. You are not ruled out that possibility, but definitely not happening in the very near term as well. Wish you good luck for the remainder of this year on the operational front and the case mix and the ARPOB improvement that you've spoken about as well. The street likes your numbers. The stock up nearly 4% in a weak market.